The Central Board of Direct Taxes has issued new ITR forms with several changes for the assessment year of 2020-2021. The department has issued new ITR 1 Sahaj, ITR 2, ITR 3, ITR 4 Sugam, ITR 5, 6 and 7 and also ITR verification forms. The Income Tax Department had earlier withdrawn the ITR Form 1 and ITR Form 4 to incorporate changes made in the income tax rules in the wake of the coronavirus pandemic. Taxpayers must assess their tax liability for FY20 and make sure they are maximizing their Section 80C benefits if not already done so now. The Tax Department has also revised the IT return forms to allow assessees to avail the benefits of various timeline extensions granted by the government following the coronavirus pandemic. The new ITR forms also require taxpayers to furnish details of tax savings or investments, donations made during June 2020 for FY20 separately. The IT department usually notifies the ITR forms in the first week of April of the relevant assessment year. This year, though, the department notified Forms 1 and 2 in Jan, but after the coronavirus pandemic, the department revised the forms and has now notified all the ITR forms in the last week of May. So which ITR form is really meant for you? Well, ITR 1 form, also known as Sahaj, this one is mainly for salaried individuals earning up to 50 lakh rupees annually. ITR 2 form is for individuals and Hindu undivided families not having income from profits and gains of business or profession. ITR 3 form is for individuals and Hindu undivided families having income from profits and gains of business or profession. ITR 4 form, also known as the Sugam form, is meant for individuals, Hindu undivided families and firms other than LLP having total income of 50 lakh rupees and having presumptive income from business and profession. ITR 5 form is for persons other than individuals, Hindu undivided families and companies or persons filing under ITR 7. ITR 6 form is for companies other than the companies claiming exemption under Section 11. The new ITR 6 form also asks taxpayers whether the company would opt for concessional corporate taxation announced by the government back in September 2019. ITR 7 is filed by persons in receipt of income derived from property held under trust or other legal obligation wholly for charitable or religious purposes or in part only for such purposes. And what changes have been really introduced for the assessment year of 2020-2021? Well, if you have a taxable income as dividend from domestic companies, you are not eligible to file ITR 1 form or the Sahaj form. Those with joint ownership of a house property cannot file ITR 1 or ITR 4 forms. Most importantly, the IT department has made it now mandatory for assessees to file IT returns for high value transactions such as deposits in current accounts worth over 1 crore rupees, electricity bill payments of over 1 lakh rupees or more, and spending on foreign travel of 2 lakh rupees and above, even if their income is below the taxable limit. And lastly, the Income Tax Department has allowed taxpayers the laxity of making certain tax-saving investments for FY20 till 30th of June 2020 in the view of the coronavirus lockdown. The new ITR forms show that the government is making all efforts to curb the tax leakages and also allowing law-abiding taxpayers to take the benefit of investments made during this difficult time, even if they are done after the completion of this assessment year.